You've joined us in Starting Up. Now, there's a new breed of startups out there who are helping you manage your portfolio investments. Our very own Davina Munro analyzes the trend for us and gets us their story.
Stock trading in 1996. 8-hour-long days at the exchange. Brokers fighting to be heard. Fewer trades and inefficiency all round. Stock trading in 2012, computer-based buying and selling, quicker updates on stock trends and high sophistication. What's this all led to? Well, a big market for startups like Samsara Technologies, Capital Via and Heckel. Portfolio manager startups that help brokers and traders by providing them with different ways to monitor stock trends. Samsara Capital, or the algorithm traders, was built on the belief that stock trading can be done more efficiently by tracing a stock's performance back 10 to 30 years, applying a mathematical algorithm to test how much a pattern has been repeated, and finally making a future prediction on whether to buy or sell based on the tested findings.
What we have done is we have done very thorough backtesting, identifying these patterns in the past and seeing that whenever these patterns have occurred in the past, right, what is the probability with which these patterns have succeeded. And if a particular pattern succeeds by more than say 70 or 80% time, then we know that that pattern is profitable. And next time when we are in the market, we put our money on the pattern such that, even if we succeed with a 70% or a 75% probability, we are good in terms of beating the market.
Their three products, SamCap, SamWills and SamTrends, are sold directly to family or corporate offices and high net worth individuals. Consequently, their clients are charged an advisory fee for asset management and a performance fee on the returns.
From algo trading to good old-fashioned human intelligence. Yes, that's the method that Indore-based Capital Via chooses to use. They have scaled to over 500 employees and over 2,500 clients, and all of this in just under 4 years. Well, let's go inside and meet the team.
Founded in 2008, Capital Via aids individual stock and commodity day traders with live intraday trading tips. Clients sign up on their website and a sales and marketing team create a detailed profile on each client. Based on their trading interests, a research team monitors stock or commodity fluctuations in a market every 15 minutes and provide each client with tips on how much to buy or sell a particular stock 3 times a day through SMS, social media and live chat.
What I saw in the market that there are a lot of traders who trades like with no logic, there is no rationality. So it's like a casino, and the expectations of returns are really high. We realize that we need to make an industry more organized, much more professional, with much more realistic expectations when a customer has, when a returns of 6%, 7% in a month is good enough. And we try and get into a customers, we started educating them, and then we give them a lot of live support, live hand-holding on equities, commodities, currencies, and such kind of securities in the markets.
Capital Via offers tips across a broad range of investment options and charges between 12,000 rupees and 1,75,000 rupees per year. From human intelligence to social media. And with social media vibrant these days, social sentiment at a macro level is another major factor that strongly influences trading volumes. Something that Mumbai-based Heckel was quick to identify and capitalize on. Their dashboard provides brokers with trusted information about a particular company from 1.5 million sources like credible tweets, blogs, government sources and live news.
We look at what type of news has come into the market, how the analysts and the brokers have reacted to those news, any research agency has put up an article onto that, and based on that we take a real-time sentiment out of it and says, okay, if you're trying to buy Infosys, this is how the sentiment looks like in real time. If you want, you can drill down into it, see how the sentiment has been performing in the last 28 days, see how the stock movement has been correlated with the sentiment, See when Bank of America or Merrill Lynch upgrades or downgrades the stock, how it moves up. See what favorite analysts you're following, when they give some recommendation, how it impacts your stock. So it gets all those features embedded into the stuff in real time.
Though the demand for more efficient methods of capital management is on the rise with the expanding market, convincing a broker or trader of the efficiency of new technologies is quite a challenge. One of many which startups in this field are struggling to overcome.
First of all, you need to have a guy who's good with maths, who's good with programming, and who's good with markets. So building a team becomes very difficult. The second challenge that we usually face is what we call as an alpha decay. The third is the difference in the investment psyche between what happens in US and what happens in India. In India, the psyche is not that of sticky money. You don't perform for 3 months, people start calling you. You don't perform for 6 months, people start banging at your office door. You don't perform for a year, the money is out.
With a lot of information still asymmetric in the market for startups within this space is large. And veteran analyst Praveen Chakravarti of Anand Rathi believes that there are 2 key strategies to keep in mind while dealing with clients in this space.
Startups that are very clear in their go-to-market strategy are the ones that will make it. For example, who are these companies selling to? Are they trying to sell to a direct end consumer? Are they selling to intermediaries? And also how they price these services. Let's say if they are pricing it innovatively based on per transaction, or could even be based on performance. And innovative pricing like that will again determine adoption and traction for some of these new ideas.
With trading volumes growing and the challenging trading environment that we're witnessing, the need for more innovative and efficient methods of stock picking is on the rise. Definitely a big market to address, but maintaining credibility for the startups in this space will be key.